All right, buckle up, traders. It's time to dive into the wild world of risk management. You know, that thing we all pretend to do, but secretly hope our lucky socks will handle for us? But fear not, my fellow market mavericks, because today we're going to break it down like it's hot. And trust me, in this market, it's always hot. First up, let's talk about identifying and assessing risk. You're scrolling through your charts, and suddenly, the market starts doing the cha-cha slide. Left, right, left, right. It's enough to make your head spin faster than a fidget spinner in 2017. That's where our good friend ATR comes in. No, not that weird cousin who shows up uninvited to family gatherings. I'm talking about average true range. This bad boy measures market volatility like a boss, helping you adjust your strategy. Now, onto the golden rule of trading, the 1% rule. It's like the don't eat yellow snow of the financial world. Basically, don't risk more than 1% of your capital on a single trade. Maybe 2% if you're feeling spicy, but let's not get crazy here. This rule is tighter than your jeans after Thanksgiving dinner, but trust me, it'll keep your account from looking like a dumpster fire. Speaking of fires, let's talk stop loss and take profit. These are your financial fire extinguishers. Set them up based on technical analysis. You know, those fancy lines and shapes that make you feel like a Wall Street wizard. Support, resistance, moving averages. Use them all. It's like building a pillow fort for your trades, except instead of pillows, you're using cold, hard cash. Next up, position sizing. It's not about how big your position is, it's how you use it. That's what she said. Sorry, couldn't resist. Based on your capital and that sweet 1 to 2% risk level we talked about, size your positions like your Goldilocks. Not too big, not too small, just right. Now let's get into the risk-reward ratio. We're aiming for 1 to 2 or higher here, folks. That means your potential profit should be at least twice your potential loss. It's like betting on a horse race, but instead of horses, it's candlesticks. And instead of a racetrack, it's your life savings. No pressure. And for all you math nerds out there, don't worry, I see you. Here's a formula to make your brain tingle. Expectation equals probability of winning times profit. Probability of losing times loss. It's like the E equals MC of trading. Except instead of unlocking the secrets of the universe, you're just trying to afford avocado toast. Diversification and hedging. It's not just for gardeners anymore. Spread your capital around like you're feeding pigeons in the park. Stocks, bonds, crypto, maybe even some magic beans if you're feeling adventurous. And don't forget about derivatives, options, futures, all that jazz. They're like financial umbrellas for when the market decides to rain on your parade. Now, let's get deep for a second. Trading psychology and discipline. It's the yoga of the financial world. Managing emotions like fear, greed, and that weird feeling you get when you see a red candle is crucial. Keep a trading journal, not to be confused with your teenage diary. It helps you spot mistakes and builds discipline faster than your mom saying, "I'm not mad, I'm just disappointed." Last but not least, plan and follow. Build a trading plan that's clearer than your ex's intentions. Goals, entry-exit points, risk limits, the whole shebang. And then, here's the kicker. Actually follow it. I know, revolutionary concept, right? It's like meal prepping for your finances. Stick to it, especially when the market's acting crazier than a cat on catnip. So there you have it, folks, the ultimate guide to risk management. Remember, in the world of trading, it's not about how much you can gain, it's about how much you cannot lose. Stay safe out there, and may the odds be ever in your favor. And if all else fails, there's always the time-honored tradition of turning off your phone and pretending the market doesn't exist. Works like a charm, 60% of the time, every time. Now go forth and trade, you beautiful, risk-managing monsters. Just remember, the first rule of Trade Club is, well, actually, it's to manage your risk. But the second rule is definitely don't talk about Trade Club, or was that Fight Club? Either way, you get the point. Happy trading, and may your charts always be green.